right, welcome everyone. Welcome to Daily Rates Live with the Mortgage Calculator. We'll get started here shortly. Give everybody a chance to connect. Takes a few minutes to go live on all the platforms. We already got some people commenting. Thanks everybody for being here early. And we'll get started here in just a second. Today's topic is going to be on 2 to 4 unit properties. So typically for our investors or I guess I would say newly starting out investors. Jose calls them house hackers, right? Definitely something that a lot of people can do for their first home, 2 to 4 units in order to get some income from the other units and live in one unit. Or of course, a true investor investing in a multi-unit property. So lots of requests for multi, definitely some good strategies that we have. Jose will mention a few. Also, the new Fannie Mae option, definitely a great option now that Fannie Mae allows us to go higher on those 2 to 4 units for our primary homes. A lot of good news. Good morning, everybody commenting. And we'll get started here. It looks like we're live on all the platforms. Let me go ahead and fire it up. If you have any comments or questions while we're going through it, please drop them in the comment section, and we'll get to that after the show here. But let me go ahead and get started. Welcome, everyone. My name is Nick Hershey. I am the president of the Mortgage Calculator. We are a non-QM lender that has over 5,000 specialty products, as well as FHA, conventional, VA, USDA, all these standard items as well. And today we're going to go into a deep dive topic on our 2 to 4 unit properties, which is definitely a popular request, as I mentioned before. For the new Fannie Mae program allows us to have higher limits for 2 to 4 units for primaries. We also have some great non-QM options for 2 to 4 unit properties, and all of our traditional options as well with FHA and all the other traditional outlets for our quote-unquote house hackers out there. So Jose Gonzalez, our sales manager with 28 years of experience, will pull up some specific examples for those properties. But first, I will go ahead and switch my screen and get into the general market for today. So let me switch that up. And share our pricing tool. So this is our pricing tool for our team of mortgage professionals. This will show us the general rate for today, just after 11 a.m. Eastern, so all of our standard programs are live. And if you'd like a full breakdown of all the itemized fees that go into the APR here that is going to show us, please get with one of our loan officers. We have over 300 licensed loan officers, and they can send the full itemized loan estimate for you. For our demo today, we'll compare across the programs by setting up a basic scenario to compare apples to apples across the programs. We'll set up a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. And we'll ask the computer to find the lowest rates we can offer this morning for conforming conventional. And then we'll compare that to FHA, which is usually the second option for most borrowers. And then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 options beyond the standard here. We also have VA and USDA. VA is only for our eligible vets and active service members. We did an episode on that earlier this week. Please check out that episode. And you can see some of those live quotes. We don't quote that live. And same thing with USDA. That's only for eligible properties. We did that this week as well. So if you do happen to be looking in one of those areas, check out that episode or just reach out for a quote. We can quote it, no problem. We'll start with conforming conventional here. Purchase, 30-year fixed standard loan. Primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio here of 40. So with these basic settings, let's check the rates this morning. And not much difference yet. I did see the markets are trending a little bit down this morning, so hopefully we see some updated rates later today. Fridays, some of the partners are hesitant to update rates, so I imagine Monday will be a better day for us here. But best option today, 6.624 rate, 2.375 discount points and cost. Put the final APR at 6.915. I believe that's just a touch higher than it was on yesterday's episode, but right there at 6.9. So great option for our customers that need to use conventional, definitely lower than it has been over the last few months. And we should see some continued downward momentum, hopefully here. Now, if for any reason our customer doesn't qualify for a standard conventional, the next option we want to compare, we'll set up the same exact scenario, is an FHA option. FHA allows a little more leniency on credit issues, as well as a much higher debt to income ratio we can use. But for the demo, we'll keep everything identical so we can compare apples to apples here across the programs. So our FHA options this morning, just a touch lower than conventional, just as it was yesterday. 5.875 rate, 2.375 discount points and cost, but the final APR at 6.816 there. Our customers that qualify for both, definitely don't overlook the FHA. It actually could be a touch cheaper like it is today. And remember, this APR does include all the upfront and yearly mortgage insurance for FHA. So our customers that need to use it, these are great options as it's almost identical to conventional, a little more leniency. So great options with those recent changes to FHA. Now, if unfortunately our customer doesn't qualify for FHA or conventional, our standard full doc loans, typically either banks or lenders will have to deny that customer, but that's where we love to say yes with our 5,000 additional options here under expanded guidelines. So when we select this option, everything else will stay the same. However, we get a new pop-up here where we can change the income type. So full doc is what we have to use for conventional and FHA. That's 2 years of tax returns, what most people are used to. So when we select non-QM, we'll typically take advantage of an alternative. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. We'll show that in a second. Personal bank statement, 12-month, definitely our most popular. That's what we use for the demo. We have RSU, stated income, VOE, 1099, P&L, and no income CDFI, a whole bunch of options. The most popular here, 12-month personal bank statement, and that's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit 2 years of tax returns, have different write-offs and may not qualify at all, or just may need a little bit of extra income to get that home they want. Either way, we solve the problem. No tax returns involved, just 12 bank statements, their last 12 bank statements. And we determine a debt to income ratio of 40% in our example here, using just their cash in the bank. And therefore, we can usually get a much higher income number here for our customers. So let's check out the bank statement options this morning. All right, pretty much the same as before. 7% rate here for 2.35 discount points and cost. Put the final APR at 7.403. So again, we're within half a point of conventional, which is absolutely amazing. All our customers that need to use this, it's still almost identical to conventional, but we get to use alternative docs, which is amazing. Now, our customers that need a little bit of extra help, if we scroll down, there's hundreds of variations here of bank statements and different options. Some of these that are a little bit higher rate and costs may allow things like bankruptcies, foreclosures, other issues that would cause us to not qualify. And some of these may allow slightly different ways to calculate the income. So please get with our team to find which of the hundreds of options works best. And before we go into Jose's example, we always do live pricing for investments. So we'll set up the same scenario, 80 LTV, 20% down payment, 400,000 loan amount. And this time we'll ask the computer to find the lowest rates we can offer for conforming conventional investment properties, and we'll compare that with our non-QM expanded guidelines. Remember, government programs like FHA, VA, USDA do not work for investments. So we'll stick with these two here. Start with conforming conventional. And the only thing we've edited here in our demo is the occupancy to investment. So let's check out the conventional options this morning. All right, and as has been the case for most of this week, when the rates go up a little bit, we do see this option, this portfolio option pop up, which is actually not a true conventional. This is using the same guidelines. However, it doesn't have the loan level price adjustments because this loan doesn't actually get sold to Freddie or Fannie. It is portfolioed by our partner. And therefore, it doesn't have the price adjustments that are required on conventional. So we get a 6.875 rate for 3.25 discount points and a final APR of 7.264 on this one, which is great. And our first true conventional option is down here at 7.125 rate, 3.375 discount points and costs for a final APR of 7.535. So this does include the loan level price adjustments that are required for conventional programs here. So a little bit higher APR. Now, I definitely recommend that all of our customers that are looking for investment properties also consider our non-QM options. So we'll do our final demo here. set up the same scenario, and this time we will select our expanded guidelines, also known as non-QM. So first thing we need to pick for this option is our income type, and the most popular income type and most popular loan we do here is our DSCR option because it doesn't actually require any income or employment or documentation on that from our borrower. We simply use the estimated rental income from the appraisal to determine a DSCR value. It stands for debt service coverage ratio. The estimated rents can cover the expenses, aka the property cash flows monthly. That's a ratio of 1 or higher. If the property does not cash flow, the ratio is under 1. We still have options there. But for the demo, we always use 1.5 so we can see the most common options. And finally, prepayment penalty is standard on these programs. We always select 3 years as the standard. There are options for no prepay that will limit what shows up and cost more. We can also select 5 years, which will again limit what shows up, but does save our customers some money if they hold properties long term. 3 years is the most common, so that's what we'll use for the demo here. So absolutely smoking DSCR rates here. Still have a rate 6.75 for 3.15 discount points at cost, and a final APR of 7.229. So beating conventional with DSCR, absolutely amazing. I would say 100% of investors would choose this option over a conventional option because for one, it's but even when it's higher, most investors choose the DSCR option. So definitely send those DSCR quotes to your investor clients, and definitely all our investors make sure to compare a non-QM DSCR option. If we scroll down here, some of these options at higher rates and costs may allow bankruptcies, foreclosures, like we talked about before. Some may allow different ways to calculate income, term rental income request, and some may allow different property types, which we've done a few episodes on as well. So please check out some of those past episodes and enjoy the flexibility of the DSCR options. Now let me switch my screen again, and we'll let Jose take over here in a second on our deep dive topic for today, which is 2 to 4 unit properties. So when we do the live demo, unfortunately, we just do the basic scenario, which does not include multi-unit properties. So everything we do on the live demo is a 1 unit property, right? 2 to 4 units gets a little tricky, but Jose has some solutions here and some tricks up his sleeve for some different ways to attack this. As I mentioned before, there are some updates to some of the programs for conventional. All of our non-QM options are always amazing, but Jose has a few different options here for our house hackers that may be looking to the other ones out, as well as our true investors. So Jose, if you're ready, let's go ahead and take over. Not much explanation, I guess, to do, but let's see some examples if you're ready.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. What I wanted to state it, this is 2 to 4 units, but what I'm doing in my quotes that I'm going to be presenting you today, I'm going, if there is a variance between 2 to 4 units in the output, I'm going for the most restrictive option, which is going to be the 4 unit. So some cases I've actually labeled it 4 units when that's what I did, and in the other options I just put 2 to 4 units if there may not be any difference, right? So this, like Nick was saying, pretty interesting for our house hackers out there, and those are our individuals, I like to call them, that are buying their first property. And I always recommend that everybody maximize the effort because once you do buy that first property, when you get that second property, if you're trying to get it as a primary residence, right, then you have to be aware of some of the restrictions that you may face, right? Like, for example, if you buy a single family home and then you go to buy a 2, 3, or 4 unit property, you want to buy it as a primary for whatever reason, it has to make sense. It's not going to work if it's usually in the same city as your primary is, located within driving distance of the primary and of your job and all that kind of stuff. It's going to be a really uphill battle, right? It's not going to make sense. It's probably not going to happen. However, if your first property is a 4 unit property, then it could make sense that your next property may be, let's say, a townhouse or a single family residence because there's more privacy in that type. It's a 1 unit versus a 4 unit. So that's usually what we recommend if that is an option for buyers, is try to get a 2, 3, or 4 unit property as that first one, and then proceed from there, building wealth, right? Because for most Americans, property ownership is one of the best ways to create wealth over a long term plan. We're not talking short term property flipping here. We're talking about equity appreciation, paying down the loan, and 10, 15, 20 years down the road, you have a lot of money built up. Then you could sell it, move on, and then retire or get a bigger one or whatever your plans are. So let me share our house hacker options for today. And what I'm sharing with you are some purchase options. So Nick mentioned Fannie Mae's new, or I guess agency loans, new guideline switch in the last couple of months. This is a reaction to housing shortages, right, and affordability crisis, right? The GSEs trying to come to the aid of the American homeowner or the American prospective homeowner by offering them more options for housing at a low loan to value, right? Um, we already know in some parts of the country some of the issues we're facing with financing. For example, in Florida, condos have an issue with reserves. So theoretically, a condo would be a way to try to get a low valued property, but there's no reserves, and you have to give 25% down or combine it with a HELOC, and it's minimum 10% down for Florida. That is, rest of the country is different. So I could definitely see how this may assist. So first option here, and this is the same 2, 3, or 4 unit. It's going to be 95% max LTV. And very good options here. You're looking at 7.625, almost at par, and you can buy that down to 6.875. And as I like to state, when I'm presenting the rates and I'm talking about the lowest rate option, this is just us gathering compliant rates, right? However, keep in mind in this example, I'm assuming that we do not have any seller paid closing costs, right? So, and I'm also assuming that we haven't run our compliance tests and obtained bona fide discount points. And why did I mention that? Because bona fide discount points would not be counted as buyer paid points in your compliance test. So we could definitely go lower in the rate if once we were actually setting up our file and we're getting and we get some bona fide discount points, and we can offer the customer a lower rate. Or if the customer says, hey, this is a deal I already have on the contract, what's what you can do for me, and the seller's paying $3,000 in closing costs, then you could apply $3,000 to the points that the borrower is paying, and then those points don't get considered in your test. So keep that in mind when you're structuring your deals. Our next option here, I wanted to show the difference in investment, right? So in this case, conventional loan as well. The more restrictive option is 4 units, 3 and 4 units. So I put this for a 4 unit, and you'll see that the maximum LTV is 75% when you have a 4 unit property in a conventional loan. And in this case here, still good rates, 7.625, costing 1 1/8, and you can buy that down to 6.99, costing 2.5 points. Our next example for our military, and thank you active military, and thank you veterans for doing what you do for us, sacrificing your lives so that we don't have to. 7.125 for this 4 unit VA purchase, 100% LTV here. I wanted to highlight that. It's still 100% LTV, no loan level price adjustments or anything like that for this 4 unit property. And you're looking at 7.125 is the lowest cost option. And check that out, all the way to 6.125. Wow. Now, another ultimate house hack, and that's really what I'm trying to focus this here today, is our FHA 4 unit primary purchase. And again, 96.5%, no LTV adjustments again for 4 unit, just like VA did not have any LTV adjustments either. And rates get a little bit better here than FHA, still looking good. Look at that, 7% is at par, and 5.875% is our lowest cost option. Wow, that is smoking. Right? I wish somebody would have given me some of this advice when I bought my first house 35 years ago. And our last option here, so I could put this into perspective for you all, with our flagship program, the debt service coverage ratio loan. As you all know, if you've been listening to our show, and for those of you that may be tuning in for the first time, DSCR stands for Debt Service Coverage Ratio. This program qualifies the borrower on the gross rental income generated by the property divided by the complete housing expense, principal, interest, taxes, insurance, and if applicable, mortgage, insurance, and association fee. And the resulting answer is your ratio, your debt service coverage ratio, right? And for best case scenarios, it has to be at least at a 1.0 or above ratio. That means that the gross rental income has to cover at least 100% of that full housing payment. Now, we do have interest only DSCR options that make it a little easier, because it's the interest, not principal plus interest. So interest, taxes, insurance, plus the other components that would make up the housing expense. So lower number, better chance of getting that DSCR to be at least 1.0. The best options obviously are above. We have 1.0, 1.2, above 1.25, and above 1.5. And then we have below 1.0 and below 0.75, which are our low ratio and no ratio DSCR. So this one is assuming at least 100% coverage. And look at that. Wow. Now, this is DSCR 4 unit, 80% LTV, right? And you're looking at 7.875 with a lender credit of $720. You can buy that down all the way to 6.875. Now, I want to compare this a minute to our 4 unit conventional, right? Look at that. So 7.625 there is 1 1/8, and you can buy it to 6.99, whereas 7.625 here is costing 0.65, right? So you have a better cost on the rate at 5% higher loan to value, not requiring tax returns from the borrower. Right? I mean, need I say more to our investors out there and our house hackers as well? This is a great option. And you can see, I'll show it to you one more time there so it can sink in. Look at that. This is the 4 unit at a 75% full doc. And this is the 4 unit at an 80% DSCR, no tax return. So great examples there. Looking forward to all of our house hackers out there reaching out to the mortgage calculator so we can help you structure your 2 to 4 unit property purchases and get you on track to be on the path to creating wealth.
All right. Don't see any questions in the chat. We'll give it one more minute. questions, please drop them in there. Definitely some good options. This episode is not about a specific program, right? It's using all of our programs to execute a specific property type. So a little bit of a different twist today. Don't see any questions though. So I guess since it's Friday, we'll go ahead and wrap it up. Thanks everybody for tuning in. We will be back on Monday for another episode of Daily Rates Live with Eastern every weekday. So thanks everybody and have a good weekend.
Have a great day, everyone.